Money Mentorship. Welcome back to our channel. Today, we're diving deep into the world of mutual funds, a popular investment option for both beginners and experienced investors. In this video, we'll cover everything you need to know about mutual funds, from what they are to how they work and why you should consider them as part of your investment strategy. What are mutual funds? Let's start with the basics. A mutual fund is a pooled investment vehicle that brings together money from various investors to invest in a diversified portfolio of stocks, bonds, or other securities. Think of it as a collective investment, managed by professionals, allowing investors to access a diversified portfolio without having to buy individual securities. How do mutual funds work? When you invest in a mutual fund, you're essentially buying units of the fund. The fund's value is determined by the net asset value, NAV, which is the total value of all its assets minus any liabilities. The NAV fluctuates based on the performance of the underlying securities. Investors can buy and sell mutual fund units directly from the fund company or through a brokerage. Types of mutual funds. Mutual funds come in various types to suit different investment goals and risk appetites. Some common types include equity funds, which invest in stocks, bond funds, which invest in fixed income securities, and balanced funds, which combine both stocks and bonds. There are also sector-specific funds, index funds, and more. Advantages of investing in mutual funds. Investing in mutual funds offers several advantages. First, diversification. Since mutual funds hold a range of assets, your risk is spread out. Second, professional management. Experienced fund managers make investment decisions on your behalf. Third, liquidity. You can easily buy and sell mutual fund units. Lastly, accessibility. They're suitable for both new and experienced investors. Fees and costs. While mutual funds offer benefits, it's important to consider the fees associated with them. Common fees include expense ratios, which cover management and administrative costs, and loads, which are sales charges. Make sure to read the fund's prospectus to understand the fees you'll be paying. Factors to consider when choosing mutual funds. Choosing the right mutual fund requires careful consideration. Look at factors such as the fund's historical performance, the fund manager's track record, the fund's investment strategy, and its expense ratio. Also, consider your own investment goals, risk tolerance, and time horizon. How to invest in mutual funds. Investing in mutual funds is straightforward. You can start by opening an account with a brokerage or directly with the fund company. Then, choose the funds that align with your goals and risk tolerance. You can invest a lump sum or opt for a systematic investment plan, SIP, where you invest a fixed amount at regular intervals. Monitoring and rebalancing. Once you're invested, it's important to monitor your mutual fund portfolio periodically. Market conditions change, and your asset allocation might shift. Rebalance your portfolio if needed to maintain your desired risk-return profile. Conclusion. And there you have it, a comprehensive guide to mutual funds. Remember, mutual funds offer a convenient way to access diversified investments and achieve your financial goals. But always do your research, understand your investments, and align them with your unique financial situation. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more financial insights. Thanks for watching.